All right, good morning. Welcome to the Marhelm market update from May 15th. It's been a busy week with earnings and with all the excitement this morning out of Avance Gas. I mean, let's just raise our Norwegian flag, tip our hats, call the doctor. I mean, absolutely massive report from Avance. If you recall, at the beginning of the year, the LPG sector was written off for dead. The ARB was done. And they had really run quite a bit in the fourth quarter, really all year last year. You know, the LPG stocks had been the best performing sector in 2023. They took a bit of a pause to start the year. There was a freeze in Texas, which impacted kind of the local market there, et cetera, et cetera. But it's all for naught. All is forgiven. Here we go with the slide from Avance, from Dr. Oystein himself. So last year, 4 quarters of 2023, 165 million dividends in aggregate. This quarter, granted, they had a vessel sale, another 165 million. So the market got the medicine it needed to continue the pun from the slide, up over almost 12% earlier in Oslo today. So you will recall that I had suggested buying it at the end of January. It was a falling knife at that time. It turns out I was a couple weeks early, but when catching a falling knife, it's hard to get at the exact bottom, but we've seen a complete rebound. So that has been a good one to be in. Yesterday, we had Navios. A lot of people have been following Navios. It's one of the larger public shipping companies. It's had a storied history of shareholder abuse, but it trades at a massive discount. And so the stock has done well recently as the CEO, Angeliki, had made some open market purchases. And there's hopes in the market that eventually she may change course slightly on the shareholder return, shareholder love policy, if you will. We were not expecting any change in that policy this quarter, and that's what we got. So they came out with their typical 5-cent dividend. They did make a bunch of money. What do we have here? $2.32 of EPS, 5-cent dividend. Doesn't take a math genius to know there's a little bit more room there. They did acquire some vessels. They sold some older vessels. They paid down debt. So they keep paying down debt. They keep accruing cash. They've got over a $3 billion charter backlog, 300 million plus in cash. So, at these levels, Jefferies just came out with an update on their math. They've got $141 per share NAV. And no, it's not a rounding error or mistake. I know the stock price is only $45, but it's massively undervalued. They estimate they have here over $15 a share in EPS for this year is what their model is spitting out. And so, with these markets the way they are across all 3 of their main segments, containers, tankers, and dry bulk, they're spitting out cash. You're buying at a very relatively attractive multiple on contracted cash flow. You're not looking at kind of peak earnings by any means. And there's just a massive upside potential should they change course later this year. And, I'm optimistic we might see something in the second half of the year. So one to keep an eye on. Obviously, the market was not impressed with the earnings. It traded down here quite a bit. But if you look at the 3-month or the 6-month stock price, it's been quite beneficial. HapagLloyd was also out with earnings today. And lo and behold, they've raised the bottom end of their guidance as well, similar to what Maersk did. They are trading off slightly today. So they raised the guidance from 1 to 3 billion euros up to 2 to 3. So they have not raised the top end of the guidance. Maybe that'll come next quarter, but they followed in Maersk's footsteps and raised the bottom end of the guidance. This is impactful for kind of what people are looking through for ZIM this week. And so we'll see how that goes. Obviously, Zim has been on absolutely tear, as has, I showed the longer chart here on Hapag Lloyd. It traded off a little bit today, but, over the last few weeks, it's been on a tear as well. So, with Zim, it's obviously run quite a bit. I wouldn't be surprised if some of the kind of the near term is baked in there, but, these guys are making money, especially Zim. So one to keep an eye on as they continue to raise guidance. Hafnia was out with earnings today. They traded off a little bit, but over the last week or so, product tankers have been on a run, kicked off by Ardmore last week, as we discussed. And so, I assume some of the positive numbers from Hafnia were baked in. So kind of flat today, nothing too out of the ordinary. 34-cent dividend on 43 cents of EPS. LTV is down to 24%. They're making a bunch of money. Hafnia and Torm have just been cash cows in the sector, and it continues, all systems go, coming into summer, which traditionally is a slower part of the product tanker market, but, keep moving forward. DHT was out with earnings after market close yesterday. They paid 100% dividend on 29 cents of earnings. They have 78% covered at 47,000 a day. And the stock has really been on a run since, the end of last year. So, over $12 a share. They haven't seen that. They had peaked the other year, kind of fell back down. Now they're off and running. So it's just it's a cash flow machine. Some folks in the industry are saying VLCCs remain kind of the hope play. One of the only they've underperformed Aframaxes over the last 2 years since the Russian sanctions. The order book is very accretive. Everything looks pretty healthy in the VLCC market, but it hasn't taken off to the levels that people maybe had expected it to. Traditionally VLCCs will trade at a premium to an Aframax, and it's been quite the opposite, where they trade kind of in line or in some cases even below Aframaxes. But DHT is a blue chip company paying out healthy numbers onwards and upwards there. And then we'll go, just recap some of the Tradewinds news that's been out. Two stories I thought were worth mentioning here. We have Genco is going to a vote. So Economou, who's one of kind of the shipping OG guys, if you will, the man that went to Wall Street in the early 2000s and shoveled up all the money, made a ton of money for himself. A lot of shareholders did well as well until maybe they didn't. But he's been, he's back. He's a very, very astute investor, a bit of a shark, if you will. He's been playing around in a ton of these kind of smaller shitco style companies, but then he's also taken a position here in Genco. But it just came out that he's been selling down his over 5% position ahead of what's going into a proxy vote. So sounds like he's just a little bit bored. It'd be great to talk to him, hear what motivates him. But he's got a lot of resources. He's got a lot of time on his hands. And it seems like he's been spending that playing around some public companies. Maybe not a bad retirement plan for myself. And then Shell was out with news on alternative fueling. No surprise here, given Shell is all in on LNG. They've got LNG infrastructure everywhere, but it really highlights how we're creating this kind of bifurcated or trifurcated or, probably 7 or 8 furcated alternative fueling market. And so, Shell's out announcing that they are not really looking into to biomethanol or methanol, really. Maersk, on the other hand, has gone all in on methanol and blue methanol and all the different colors of methanol that they're going to create. LPG guys are doing propane, which that makes sense for them. There's talk of ammonia bunkering. So there's a whole host of options out there. LNG obviously has kind of the start, but when you look at the actual reduction of emissions from LNG, you get a little bit on carbon, but you also have the methane issue. So it's going to be interesting to see how this all develops. But you're creating pockets where massive companies have varying different interests across the spectrum. So busy day in shipping today, this week. Crowd favorite Okeanis is out tomorrow. Navigator Gas is coming. Busy week, but just want to touch base on what's happening so far and talk to you guys soon.